companies and all the risk assets. But on the other hand, if you were to go and look at like the bond market and the bond portfolios, bonds are down, like the BOND index, the long bond index, it's down almost 17% in the year.
Oof.
So for 30 or 40 years, you had this 60-40 bond portfolio, and the idea
Because bonds
was
were considered a safe space.
the idea was if stocks work, then bonds will be a low return and stocks will be a high return. But if stocks trade down, people will shift their money to bonds, and the interest rates will go down, the bonds prices will go up, and you'll actually get a yield on your bond portfolio. But of course, that broke around March of 2020. And the reason it broke in March of 2020 is because interest rates got pegged to zero. So after we had lowered interest rates from 5%, 5.5% to 5 to 4.5 to 4 to 3.5 to 3 to 2.5 to 2 to 0, and left it at zero, then the debate was, can they take interest rates negative? If you can't take interest rates negative, then bonds don't ask, or 6 months or whatever it is. So I think what happened here is the Fed just pumped tons and tons of liquidity, and we stayed high for about a year and a half. And I remember when Jerome Powell said, "I'm not even thinking about raising interest rates," and said strongly that it'll be till 2024 before interest rates start coming up again. But here we are in 2022. And now instead of raising them a quarter point, each time, now they're raising them 75 basis points. So they're taking 3 steps at a time, multiple times. So we took the cost of money down faster than any time in history. And now we're jacking up the cost of money faster than any time in history. And the result is that all the traditional models are broken. Let me give you a 2-year postmortem since we started dealing with this issue. MicroStrategy had a $500 million of cash, and we saw interest rates at zero, and we saw the stock market inflated in the summer of 2020. And we said, well, what are we going to invest in? And we looked around at everything. Should I buy gold? Strategies just bought as much Bitcoin as we could get our hands on since August 10th of 2020. And in that time period, stocks gyrated north, they gyrated south. Currencies have changed. So let me tell you what's happened. MicroStrategy stock, our stock is up 94% since that day.
Well,
Bitcoin is up 77% since that day. The S&P index is up about 18%. The NASDAQ index is up 7.5%. Gold is down 16%. The bond market, if you just bought bonds, they're down 18%. Bonds are down 18%. And silver, if you think silver was better than gold, it's down 32%.
Jesus.
Now, if you go on and say, okay, well, fine, let's just buy big tech. If you had bought the greatest of the big tech companies is Google. Google is up 41%. Apple is up 39%. Microsoft's up 22%. You might have won. Those were all better investments than the S&P. Much better than NASDAQ. Much better than gold. Not as good as Bitcoin. Not as good as MicroStrategy. But if you bought Amazon, you're down 18%. That was overvalued. 39%. IBM's up 6%. Salesforce is down nearly 20%. SAP is down 45%. So, summary for us, MicroStrategy's strategy was buy as much Bitcoin as you can and buy it with equity and debt. We borrowed money. We borrowed $2.2 billion at a blended interest rate of like 2% or 1.8%. So we borrowed cheap money while money was cheap, and we bought Bitcoin. Now people are saying, that's stupid because Bitcoin was trading up and then it traded down. at the end of the day, if your time horizon is a decade or longer, if you can borrow the money for longer than 5 or 6 years and you can hold it through the volatility, then raising cheap money, grabbing billions of dollars at low interest, and then investing in a scarce, desirable asset that's got sort of a technology appeal and holding it for a long period of time, that's going to be a good strategy. That's why our stock is outperforming Bitcoin. That's why we're outperforming all the enterprise software companies, all the big tech companies. And the reason Bitcoin's outperforming all the other asset classes is because it's scarce, it's desirable, it's technical. No one's going to write a piece of software to make gold better. You're not going to, right? So if I declare a war, I could just draft every single adult in the country, put them in the military, send them off. And if I lose the war, they're all dead, right? What's it do to the economy? The economy crashes, right? What's it do to the prices? Well, price of everything go up. If you want to create inflation, you do it a couple of ways. Either you cut the supply, or you cut the supply of the product you want to buy, or you increase the supply of the money that's available to buy it with. So if I make it illegal to manufacture food, the price of food's going up, right? I don't even need to print more money, right? I can create inflation just in a war, like in World War II. We have gas rationing. You have food coupons. Why? Because all the gasoline gets shipped off to Europe to put in tanks or to put in airplanes or put in ships. So when you have policies that are declaring a war on something, you divert resources. So we had a war on COVID. We have a war on carbon, an energy war. If I decide I don't want you to burn coal or oil, that I enter into government and politics, you believe the political process is a way to make the world better. So what you have is political organizations, centralized organizations, getting progressively more powerful. And as they get more powerful, people do things, right? And I think if you roll the clock back to Ronald Reagan, he would say, government's the problem, government's not the solution. So let's take nuclear energy, right? The cleanest form of energy is nuclear energy. It's the cleanest, probably the safest. Nobody died at 3 Mile Island. We can't hardly trace a death from nuclear energy in the U.S. And yet we haven't built a nuclear power plant since the creation of the Nuclear Regulatory Commission 50 years ago. And in Germany, they shut all theirs down. The world, they didn't get there without holding an asset that had technical potential for a decade or longer. There's no get rich quick scheme. So I think that people want an easy route. If you're trying to get a quick win with no volatility, with no risk, doesn't make sense. And if you're actually trying to be successful in a hurry with volatility, that probably still won't work either. I mean, ultimately, success comes from taking a decade-long view, right? Andrew Mellon, John D. Rockefeller, Jeff Bezos, right? We forget, like, Tesla was founded 20 years ago. Like, people think it's an overnight success, but it's not an overnight success. And with regard to the macro picture, we live in a time of unprecedented public